So you can just simply say technical analysis is simply the use of candlestick highs and low to determine the future candlestick highs or the future candlestick low.
Technical and fundamental analysis. We have what is called the money management. And the third one, we have what is called trading psychology.
There are basically about 3 aspects of trading. We have the 1, technical analysis and fundamental analysis. We have the 2, money management. We have 3, psychology. Now, I want you to tell me in the comment section, which among these 3 aspects do you think is the most difficult aspect of trading? Drop in the comment section and tell me the reason why you feel like this is the most difficult aspect of trading. Now, by the end of this video, you're going to see the aspect that is difficult and as well the reason why it is a difficult aspect. Now, let's talk about the first one, which is technical analysis. Technical analysis is simply the use of previous price data to determine the future price data. Let me recap. Technical analysis is simply the use of previous price data to determine future price data. Now, when it comes to the technical analysis, we are using the previous data to determine what the future data is going to be. And now, these previous data and future data are represented in form of candlesticks. And now, these candlesticks have a high and a low. So you can simply say, technical analysis is simply the use of candlestick highs and low to determine where the next candlestick highs and low is going to be. Do you understand? So you can just simply say, technical analysis is simply the use of candlestick highs and low to determine the future candlestick highs or the future candlestick low. Is that clear? Yes, it's clear. Now, I'm not going to go deep into explaining how to use this one to find this one, or how to use previous data to find future data. I'm going to do that on my subsequent video or in a special video where I'll go deep into it. Because if I go deep into it, this class is going to be very boring. Now let's go to the second one, which refers to as fundamental analysis. Now, fundamental analysis is simply the use of economic data or political event to decide or to determine what the next price is going to be. Let me recap. Fundamental analysis is simply the use of economic data or political events to determine direction of the market. Now you want to ask me what is economic data or what is political events. I'm going to explain what this is and what this is. Economic data is simply a set of information that tells us how good or how bad the economy is. That means if you want to see how good or how a country's economy is performing, you simply ask for economic data. And now economic data simply consists of the GDP of the country, simply consists of the unemployment rates of the country, it simply consists of inflation rates of the country, and as well it simply consists of how production is being produced in the country and how consumers are consuming what is produced in the country. So these 4 factors determine what the economic data is going to look like, and it tells if it's good for the economy or if it's bad for the economy. Now, what is political events? Political events are simply events like, let me say, EndSARS, COVID, protests, rally that might hinder or improve economic activities in the country. Now, depending on how this event happens in the country, it can be good for the economy and as well as it can be bad for the economy. When it's good for the economy, it shows that the currency of the country is good. And when it's bad for the economy, it shows that the currency of the country is bad. So you're simply using economic data and as well political events to determine how good or how bad the country's economy is. I'm still going to do a special video about this in full in my subsequent videos here on this channel. If you're seeing me for the first time, my name is Divine, and what I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to be seeing content like this, I want you to like, subscribe, and as well drop a comment. And as well you can share this video to your friends. Now let's talk about the second one, which is referred to as the money management. Now money management is very simple and it's quite very explanatory. You are simply managing the money that you have. So when it comes to money management, you have one objective, and the objective is for you to determine how much you are going to give to the market, and as well how much the market is going to give to you. Let me recap. You are simply here on money management to tell you how much you're going to give to the market and how much the market is going to give to you in return. So that's like the objective of money management. Whatever the market gives to you is your profit, and what you're willing to give to the market is your loss. Now, the game of this money management is for you to be able to minimize how much you give to the market and as well maximize how much the market is giving to you. Do you understand? Now, you are minimizing how much you're going to give to the market, and as well, you are maximizing how much the market is going to you. What it simply means is that you are minimizing your loss and maximizing your profits. I'm still going to explain this in my subsequent video, where I'm going to go deep into it for you to understand what I'm saying on this channel. So if you want to see this content all of the time, I want you to like, subscribe, and as well drop a comment. Now, there are factors that determine how good or how bad your money management is. Those factors or that principle is referred to as your lot size and as well your PIP. The lot size and as well the PIPs. Now, the lot size is simply what tells you how much am I writing? The lot size is simply what tells you how much one PIP movement is going to worth. And a PIP is simply the movement price making in the market. Like to say, if price make one movement, it's called 1 pips. If price make two movements, 2 pips, 3 movements continuously, 4, 5, and 6. So the pips is simply telling you how many moves the market has made, whereas the lot size is simply telling you how much one of these movements is going to cost. So if I'm able to understand and calculate all these things, you're able to apply a very good money management. Is that clear? Yes, it is clear. Now let's talk about the third one, which is referred to as the psychology. The psychology. Now, psychology is simply the awareness of how you're going to feel that's going to affect how you're going to trade. Let me recap. It's simply an awareness of how your emotions can affect your trades. That means how you are going to feel or how you're feeling can one way or the other affect your trade or affect your trading decision. That aspect is referred to as psychology. And what you want to do in psychology is for you to understand and be aware of these emotions that you can likely feel in the market. And we'll have like 4 different emotions you can feel in the market. We'll have like fear, we'll have like hope, we'll have like greed, we'll have like excitement. I hope I spelled that very well. Now, these 3 emotions that you can display in the forex market can, one way or the other, affect how you see a trade. It can affect how you execute your trade. And let me tell you the gospel truth, this is the most difficult aspect of trading. Why? Because the way I react to a particular event is different from how you react to a particular event. Let's, for instance, the way I react to a $1,000 loss might be different from how you're going to react to this same event or this same situation. Now, the way I react to a 10K loss is different from how you're going to react to a 10K loss. So we have different ways we react to situations. And now that is left for us to see how we can control how you're going to react to a particular event and still be on check. This is the most difficult aspect of trading, because I cannot teach you how you're going to react to a particular thing. You have to decipher a way and see how you can manage yourself and react properly to any situation you see on ground. Now, when it comes to fear, they're basically about three. They're basically about. Let me listen off. When it comes to fear, they're basically about two major types of fear. We have one, the fear of losing your money. We have two, fear of missing out. Now, these two fears are the most, common fear in the forex market. And when it comes to fear of losing your money, now this simply comes to maybe you have a small account or you have the small money you are using to trade, and you don't have an extra money that you're going to use to replace that loss or replace your account. It maybe eventually you lose that money. So you're scared of maybe opening a trade. You're scared of executing a trade because of you don't want to lose your money and you don't have any other money to replace the money you have if you lose the money eventually. So that's like most common fear we have in the market, the fear of losing money. Now we have number two, fear of missing out. Now when it comes to fear of missing out, let's for instance say you want to buy from this angle here and price come back to this place and start buying up. Now because price is not get to this point now, you simply enter from this point because you are scared of missing out from this point. So you want to join this place and simply continue buying. But most of the time, price come back to this point and still go. So this is a fear of missing out that occurs in this point here. And it's very common among traders. Your body is always giving you that, you don't have patience, you're going to lose out on this trade and you want to keep going and you get kicked out on the long run. Now, the next one I'll talk about is hope. Now, I'm going to give you an example again as well too. Now, let's for instance say you want to buy from this point here and price is currently at this point and you bought from this point and you've seen that this point price is now going against you at this point and you're still hoping that let me enter another trade here, price is simply going to go up and continue going up. Well, eventually you see price keep going down and then you lose all your money. So you have the hope. You are hoping that price is going to come back to this point and still going to buy up and you keep on adding position until you finally lose all your money. Now we have greed. Now the greed is simply when you're trying to use a $10 to make a 50 or let me say $10,000 in the market. Now for greed, let's assume you want to buy from this point here and you want to exit at this point here. And for instance, price comes to this point and start buying and get to the point where you need to exit. But because of your greed, you said, price is going in full momentum and I think price is going to likely come to this angle here. So let me wait for price to come back to this point and I take my profit from this place. But because of your greed here, you're simply going to keep on holding this stuff until price comes to this point and then stop you out. You end up in loss. So greed is one of the major factors that decide how you're going to feel or react in the forex markets. Now let's look at excitement. How can excitement make you to, make a bad trading decision in the markets? Now let's for instance say you had three trades today. You had 3 trades today. The first one had hit your TP. Now you become overexcited. You're too happy, or you're becoming happy like, this thing is shocking you, splitting you. Now you go for the fourth one. Meanwhile, your trading plan tells you that you're going to have only 3 trades today, and you go for the fourth one. And maybe you want to increase your lot size and see how you can make extra money today because you are overexcited. Now what will happen? You simply buy from this place and price kick you out, and you're going to lose all these 3 things you achieve for the day. So all these emotions can simply make you to make a very bad trading decision, and on the long run, make you to lose your money. We talked about the hope, the fear, the greed, and most importantly, the fear. I think that will be all for this video. If you find this content very valuable and you want to see content like this, I want you to like, subscribe, and as well, drop a comment. I'll see you in my next video. Peace.